From TheoTrade, this is Don Kaufman. It's June 3rd, 2019, and you are watching the TheoTrade evening video. Big selling in big tech is effectively what we're seeing today, but before we get there, let's talk a little bit about the S&P futures, specifically what we term the E-minis and our gravity points. For those of you that do tune in from time to time, we've talked extensively about specific levels that we term here at TheoTrade gravity points. Right now, we are just north of 2731. I mean, people, we're pretty much on the button. In fact, in this weekend's update, we were discussing, the velocity of moves between 2811 and 2731, and that is precisely what we saw inside of today's trade, a vicious move to the downside. Again, predominantly this vicious move caused by technology. In fact, to look at a couple of specifics to begin with, yeah, sure, the S&Ps are down 15, but you have to actually stand back from this and say, behold, I mean, the Russell is actually flat on the trading session. What, the Dow? The Dow, it's a negligible loss of about 0.3%. And what's interesting about the Dow, that's with Boeing, kind of taking it on the chin a little bit today. Boeing down about 1.5%. Now, granted, Boeing is way off the bottom of the trading session, which was all the way at 330. But again, a rather resilient marketplace. What is getting hit and hit the hardest, as we said, it's just big selling in big tech. Now, for those of you, again, if you're a little newer here to TheoTrade, you might not necessarily be familiar with this. This happens to be this conglomerate symbol. We here term it the monsters of tech. It's Facebook plus Apple plus Microsoft plus Google plus Amazon. And I've actually ratioed this together to form this blended symbol. The monsters of tech, net, they're down about 5%. Now, that is, of course, being led by none other than Facebook. And Facebook, yeah, it's off the bottom of the session. I got to tell you, at one point today, I thought they were actually going to halt Facebook as the sell-side activity just got downright nutty in there. But in the not too distant behind that happens to be none other than Google. You know, stepping back from the screen for just a second, again, with just 12 minutes left in the trading session today, I was stepping back from the screen and saying, wow, this marketplace is incredibly resilient. I mean, come on, the S&Ps are only down 18 when you have, your largest market caps inside of the entire S&P 500. People, they're not just getting hit, they're getting hammered upon. Take a look at Microsoft today. You know, Microsoft, it started off the day, all right? Nothing wrong. Saw some sell-side activity, and it's just been, again, taken out to the woodshed throughout the course of the day in a gradual yet consistent kind of decline over here. You know, the way that I kind of view this, again, even though we have strong sectors, and something I'm going to look at here momentarily is, you realize the advanced decline line in the S&P 100, it's positive. You have to love this kind of stuff as a trader because, you know, in all the years that I've been a trader, this kind of stuff only happens literally a handful of times. And yet at the same time, you see things like this, you're like, wow, you know, I'm not sure I've ever seen this before. The fact that the S&Ps are down 18 with a positive advanced decline line. The Nasdaq is actually down almost 2.5%. This is just dogs and cats living together over here. People, you got chaos in your marketplace. But before I get over to that advanced decline line and dig deeper into that, you have to realize, that tech is arguably the longest tent pole out there. I mean, you're pretty much kicking this huge tent pole out. What do you got now? Right? Oh, let me see. You got the financials. Where are the financials right now? Well, they're flat on the trading day, which is actually one of the reasons the S&Ps are down, only 17 points. And I say only 17 points. Again, recognize that the S&Ps being down 17 with monsters of tech down 5%, is almost like an outright miracle in trade today to see, again, the market's been resilient. And the reason I'm bringing up the financials, I said, what do you got left in here? You got the financials? Yeah, but the financials have been on the sell side now for quite some time. It wouldn't surprise me to see the financials, though, bouncing back, right up into this 2650 kind of handle. The reason I'm so kind of astounded by some of the trade today, look at the bonds. Okay, the bonds, that's it. We've gone to Never Never Land. I mean, the bonds have absolutely exploded. In fact, I talked about this in the weekend video. I'm starting to warm up to the idea to want to short the bonds, but as I said in the weekend video, we ain't home yet, and clearly we're not home. The bonds are up another point. I mean, have you looked at the TNX? This is the 10-year interest rate. We are a straight shot now down to 2%. In fact, you have to pull up almost a 5-year weekly to see the amount of damage that has actually been done over here. Interest rates, okay, are absolutely collapsing right now. And with that, of course, looking at interest rates, nothing would be complete without pulling up the CME group. Well, this is the probabilities, and this is the probabilities relating, okay, to the Fed specifically. In this case, well, we're going to be talking about cutting rates. Now, for those of you that have never seen this, and again, I bring this up quite frequently, probably about once a week here on these evening videos. Right now, this is where Fed Fund futures rates happen to be, 225, 250. Do you realize there is a meeting coming up, and that meeting is coming up June 19th? Right now, there's only a 62% chance the Fed actually stays put. The coming meeting, which is what, just like 15 days away, is live. Live effectively means, okay, hey, we could actually see an interest rate cut. The marketplace is pricing in a 37% probability. The craziest thing is this, okay, just a few weeks ago, there was like 100% chance that they were not going to have any interest rate cut. What a difference a few days can make. The economy is now slowing down. A non-voting member of the Fed actually came out today and simply said, hey, it's, probably time for a rate cut. That was actually the Fed's Bullard in a speech earlier today. Nevertheless, again, 37% chance of a rate cut coming up. If you don't believe that one, take a look at July. July, right now, is not only live, they're expecting a rate cut to come out of this. Now, if you backed up into the time frame of March, all right, look, we're just 2 months removed, all right, in March, we were talking about all the way out into January of 2020, even the possibility of a rate cut. If you look at January now of 2020, and that's, again, this is January meeting of 2020 of the Fed, look how low they're pricing rates to be. All right, we're talking about people. This is a full point cut. If rates right now are like, 2.5, they're talking about cutting it back, for example, to 1.5, and they're giving really high odds for that occurrence. Again, what a difference a few trading days makes when it comes to interest rates. It's a complete, again, change in the economy, complete change in how the markets are actually reacting to this. In fact, when the market actually heard the news, and I want to show you this specifically from the Fed's Bullard, the initial knee-jerk reaction was a wild candle to the upside, followed by wicked sell-side activity. Interesting irony over here. Again, here's the comment right there, all right, about the possibility of a rate cut and a rate cut coming soon. Moments after that, the marketplace looked at this and started selling off. However, at the exact same time the market started selling off after the comments by the Fed, Apple was tweeted about by the Department of Justice, opening up the possibility of an antitrust, and that just took the marketplace apart over here. I mean, people, it has just been a tweet-filled, news-filled fun fest inside of today's trading session. So it looks like as we come to the close, we have actually bounced off that 27.31 gravity point, but we're not done yet. One of the other aspects that I did want to show you over here, again, was the advanced decline line, because this is just downright wicked. Look how positive the advanced decline line is. There are sectors that are rallying. This is what I was talking about kind of in the weekend video. There are sectors that are rallying right now, okay? There are pockets of strength amidst this marketplace. And again, we are running, all right, up into the close. So you've got all these pockets of strength. A moment ago, we were looking at the financials, which are relatively flat, which have now exploded back to the upside. Again, imagine this. Financials are rallying with interest rates doing what? Falling. Again, that's kind of dogs and cats living together inside of this marketplace. This is going to be all about opportunity. When I talk about opportunity, just about a week ago, we talked about a trade inside of the materials sector, XLB. That trade is now closed. We discussed a trade inside of MasterCard, a short position in MasterCard. That trade is now closed. Okay, I've actually talked about trades inside of the British pound. The British pound, well, tell you what, that one's not closed, but we are absolutely headed the right direction. We are now long the British pound, and we are headed the right direction over there. Now, to switch gears on you completely, again, trade opportunities kind of emerging everywhere, both from the long and short side on oversold, products out there, oversold, sectors. The other aspect that I really, as I said, want to switch gears on you for a second, some decent sell side activity today, yet the volatility shrugging its shoulders once again. And I was discussing this in the weekend video as well. Okay, one thing perplexing a lot of traders, including myself. Look at this, the VVIX, the volatility of the volatility index. Well, granted, it's falling, but that's because the marketplace is rallying. But even in some of the depths of the sell side activity today, we're not getting up there. All right, you start to look at the VIX. The VIX, once again, in a longer time frame, shrugging its shoulders at this entire move. Okay, you start to get lulled into a false sense of security when the volatility, it's coming up. It's coming up, mildly so. I mean, you have to start to back away again from the marketplace. Look at some of the damage that's being done. Before you know it, they're going to be talking about full-blown corrective action, right? The S&Ps were up 18%. Now they're only up about, 9%? All you need is a, fairly stiff sell-off inside of today's marketplace, and you'll be talking about a corrective market, and yet the VIX hasn't even hit the 20 level. We're not even going here. There is a tremendous amount to think about inside, all right, of this marketplace. Nevertheless, one of the things I would expect, okay, in just the next few hours possibly to come, a bounce back to the upside. You can see it actually emerging right here, right now. Again, we had the Nasdaq also bouncing back as well. As I said to begin with, there's a lot of heavily oversold areas in this marketplace, okay? If you miss the bounce in some of the sectors, if you miss the bounce in the overall marketplace, have no fear, because I think we're going to be able to step in and actually short a couple of those bounces. I'll give you a quick example and leave it at this. If you look at something like the emerging markets have been absolutely tagged lately to the downside. Here we go. We're on a bounce back to the upside. Emerging markets come up a little bit further. We'll actually use an in-out spread to step in and short them. That's only one example. Again, there are numerous examples in different sectors and the marketplace as a whole that we're going to have the opportunity to be able to short those bounces. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.